Welcome back, traders and investors, to Benzinga's pre-market prep, brought to you by MarketFi. I'm your co-host Joel Elcon, along with Dennis Dick, and we have Jonathan Corpina on the line. He's a senior managing partner at Meridian Equity Partners, talking to us live from the floor of the New York Stock Exchange. Jonathan, how you doing today?
Gentlemen, good morning. Happy Friday.
Well, we've had a very volatile week so far. They took the market down on Tuesday and Wednesday, and then everyone just bought it back up yesterday, and they were rewarded here. What's your take on the crazy activity in the market this week?
You said it right. It's crazy activity in the market. It's been showing me multiple things that we can discuss. This market, and I think investors are really confused. I think investors want to be long this market, but they're not really sure how long they should be and for what period of time. And I think conversely, there's the sellers that are out there that are waiting for this market to continue to find a top and tip over, and when it does, momentum to the downside will kick in. So we've got these two camps here that both are pretty sure that they have got the right trade, but don't have enough conviction on it to put that right trade into effect. So that's why we continue to see this market rally 150 points and then come down 250 and then pick its head back up again. This type of movement in our market just continues to show me that participants are there. They want to be involved. They just don't know how to really stay involved in this market. So we were trading above 2100 in the S&P. We started to get a little bit of a sell-off, and kind of ticks down little by little. And then there was some pretty good momentum to the downside. We broke that 2070 level that we've been kind of looking at on a longer-term basis, only to stay down there for a very short period of time. We've bounced back up again, and clearly the economic data that we're seeing today is going to help this market. I think investors throughout this week have been waiting for today's number. I think they were somewhat shocked last month by the poor number, and they were hoping and expecting that this number would come back and put it back in line to what we've seen in the past. I'm actually quite surprised by the revisions from last month that we're seeing here. I thought that those revisions would have been more to the upside, not to the downside, and that has not kicked into the effect on the overall S&P so far this morning. But I think overall, investors felt and knew that the number was going to be better this month than from last month, so why not play it that way?
Jonathan, what do you think this means for interest rates here? After these numbers, obviously everybody is, speculating that they're probably not going to raise in June. Maybe they raise later this year. First of all, what do you think after these numbers? And then secondly, what do you think about interest rates, and when do you think the Fed's actually going to start raising rates?
I don't think today's numbers help or hurt the overall conversation that's there. I think Miss Yellen's comments yesterday or the day before, talking about market values are too high as far as they are right now, stock prices. I think that was quite telling in the overall conversation that we're having here. I don't think the Fed needs to, and I don't think the Fed wants to do anything in a short period of time. Things seem to be sailing the course as expected. Nothing got derailed when tapering ceased, and our economy has been waiting for this interest rate hike to kick in. And in the interim, in the gap between tapering stopping and interest rate hikes, we haven't had this capitulation, right? The spigot was turned off with tapering, and the markets didn't implode. Our economy didn't implode. We didn't see any real trickle effects from that. So the Fed is in a great position to be able to continue to kind of push this down the road as far as they can, and keep investors, interested in the markets and interested in the economy and interested to see when something is actually going to occur and happen, but they don't have to make that move yet. So to answer your question, when do I think it's going to happen? I don't think it's going to happen in 2015. I don't think that the Fed has any need to move quickly. They've got plenty of ammunition to play both sides of the fence here, right? The economy is getting better. Why not mess it up now? And then you have a month like last month when the jobs numbers were abysmal, and you can blame it to weather and other factors that are there. But then the Fed can say, well, these are the reasons why we're looking at this closely. We're not putting a time frame on anything yet. So I think we've all been conditioned to understand that the Fed's not going to move quickly. They're going to make this a very calculated and educational maneuver here. But I don't think that they're going to have enough reason to do anything soon. Now, I think something should happen soon, But in my intention, my thoughts is the Fed's not going to pull the trigger anytime soon.
What about earnings season so far? What's your appraisal of it? I mean, a couple stocks like Apple and Disney, blow things away, and boy, they really treated Apple poorly. Disney also sold off. What's your take on that?
You look at Apple and Disney. When earnings are coming out, and those are trading close at the all-time highs there. So, I think naturally, even when their earnings are good, the profit takers will take over that trade that's there. Earnings season overall, I think, has been okay. I don't think it's been great, and I don't think it's been horrible. I'll give it a B. But that's an okay earnings season is viewed as positive news, right? As long as there's no landmines throughout the journey that we're going through here, then things are going to continue on its way. Yes, we're going to have some companies that miss earnings and some that have some pretty good volatility caused from headline shock. But other than that, I think companies have really adjusted the way in which they're viewing the current economic times, right? So, we look back a quarter, oil was trading below 50. We have the dollar euro currency conversations. We have certain turmoil that's going on in the Middle East. We've got all sorts of factors that are there. I think companies have really been able to manage the expectation of investors moving forward as to how their outlook is going to be. And I think that's really what investors look at during earnings season. We look at revenues, we look at earnings per share, we kind of do a little deep dive into the reports there. But I think on a 35,000 foot level, people want to know, okay, what do you think is going to happen next quarter? How is oil going to affect you next quarter? How are currency rates going to change and affect you next quarter? So I think that's really what investors have been looking at, and I think they've been okay with what they've been hearing.
Jonathan, so we're coming out of earnings season here now. We've just got the jobs number here. I'm just looking and I'm wondering if we're going to have that catalyst to really drive us out and break out of this trading range. Because really, if we look at the last 4 or 5 months of action in the S&P futures, we've really been in a trading range. Every time we get over the 2100 area, we seem to find sellers. Every time we get down to the 2050, 2040, or mid 2000s, we find buyers, and we're just stuck in this trading range. What is going to finally be the catalyst to either break us out of this trading range or break us down? Because we're right back up here at resistance again this morning, up here at 2103, and I just keep thinking that it's just trading in the same range.
Yeah, and this kind of reminds me of last year. Last May, I remember having conversations with colleagues and reporters, sell in May, go away, and the complete opposite happened. I think what's going to happen is that we're going to kind of trend and tread through this month of May. Next month's going to be end of quarter, and I think we're going to start to see a little bit of momentum on the upward side as we get through June. End of the month, end of June, we've got a large Russell reweighting, which plays a big factor in portfolio management and portfolio shifting, and it gives portfolio managers real significant opportunities to make some pretty big moves, and index managers to make some pretty big moves. This is the pattern that we saw last year. May was an up month. That continued to kind of trend through the summer, and I think we're going to have that continue. I think it's just going to be more of a quiet trend. We're not going to continue to see these big swings as we get through the summer months. I think it's going to be a very slow and calculated moving type of market movement. And every month that passes by, the closer we're going to get to that interest rate move, when that could occur. But as we get later in the year, I think investors are going to get a little bit more anxious on how that's going to affect our overall markets.
Jonathan, the way it felt the couple days on when we were selling off on Tuesday and more so on Wednesday, I mean, it was going down. There were pretty big declines. But to me, I mean, it almost felt like there were just buyers out there that just they didn't care. I mean, they were just putting their orders out. You deal with the big money managers. They're trying to keep up with the indexes. It just seems like there's just this mentality, on these big down days just to buy, and if it goes lower to buy more. I mean, are the institutions, are they trying to keep up with the indexes and being forced to buy, or what are you seeing out there?
I can explain it in one word, and it's levels. Stocks get to certain levels that portfolio managers have in their mind, and if they miss those levels on the way up, they miss them. But when they come back down, they're not going to miss that opportunity a second time. The sell-off that we've seen hasn't been a panic sell-off. I'm not getting calls from clients that are disregarding price and looking for more liquidity to get out of positions. It's more of, the sellers are more of, I'd rather take some risk off the table, but still have that more risk to the upside, that the market's gonna move to the upside. And when we get this pullback into the markets, the institutional clients I talk to, they know where they want to buy stock, they know their levels, and they're very disciplined about it. And when they get back down there, that's when they step in. They might be wrong, but it seems like they've only been wrong for a very short period of time.
And is it technical analysis? I mean, are they going to the charts? Is it feel? Is it that the people that they have in the back room? Trying,
it's a combination of everything. Every stock has a different personality. And you can watch certain stocks that trade on a technical level, and they follow that level by a script. You can follow other stocks on an analytical level that hits certain price parameters on or near earnings season. So there's different factors that are associated there, but I think the portfolio managers, along with their investment teams, have a pretty good idea of what they feel is a fair value for a stock.
Okay. Any final words of advice for our investors?
No, I think today's going to be a real interesting day. I am honestly quite surprised that the futures have reacted in such a way. We are above now this 2100 level. It's going to be very interesting to see if we can stay here, because clearly this has been the resistance level of this market.
Jonathan Corpina, Senior Managing Partner at Meridian Equity Partners, joining us from the floor of the New York Stock Exchange. Jonathan, great outlook on the market. Go to work. We'll talk to you again soon.
Have a great day, guys.
Thanks, Jonathan.